Hey, what's up YouTube and Triple T members? Jeremy Barber here, owner of Trading the Trend chat room on Discord. There is a link in the video description. We do have a free members area, so it is free to come check us out. And we also have a free 7-day trial to get into our subscribed members area. You don't have to enter any payment information or anything like that, so it's completely risk-free to come check us out. We had one end of day play from Friday that was held over the weekend. That was TXMD. Didn't really do too much today. I think it was up about 2.5% at one point, but really not much there. It's been tough holding anything overnight. There's not much momentum carryover from one day to the next. It's been like that for a few weeks now. Makes it really difficult. It's what I would call a day trader's market. Anything that does pop with volume is pretty much based off of news and pretty random, so it's really difficult to guess what's going to be moving the next day. But it'll turn around. I mean, the market goes through phases where it's good to be a day trader, then it goes where it's good to be a swing trader, and it cycles through, and the time will come back around where it's really good to be a swing trader. So we'll just continue playing it small until that time comes. So today I wanted to discuss moving averages, what they are, how they're used, and some strategies that could also be used, that could use the moving averages. So what is a moving average? A moving average is the average close price over a certain period of time. So if you're using a daily chart, your 20 moving average is going to be the close price for the last 20 time periods. So that would be the close price for the last 20 days would be your 20 MA. Your 50 MA would be the average close price over the last 50 days. And this does translate to all time frames. If you were looking at a 5-minute chart, it would be the 20 MA would be the close price of the last 20 5-minute periods, basically the last 20 candlesticks that you're looking at. And many day traders use moving averages, as well as swing traders or even long-term investors. So it is a practical tool that can be used on all time frames and for many different strategies. So I put together a little video with some charts to show you what it looks like on a chart and how it's used and what strategies it can be used for. So here it is. Today I want to be taking a look at moving averages, their purpose, and also a strategy or two utilizing moving averages. So the most basic use of moving averages is support and resistance. It makes it nice because you actually have a visual of the support and resistance right on your charts. So there are a couple of more popular moving averages that would be the 20, the 50, and the 200. Pretty much all traders that I know that use moving averages use these, or at least have them on their charts, because like many other things in technical analysis, the more people that use a certain indicator, the stronger or more weight it's actually going to carry. So if more people have the 20, the 50, and the 200 on their charts, you would want to have it as well. So you can see this green line right here is our 20, this red is our 50, and then the blue is the 200. So the 200 is typically used for longer term investors. Anytime your candlesticks are above the 200, that's typically a bullish sign. So this 20 right here, this was my most often used moving average whenever I used them. And you can see how this is the daily chart for SPY, and you can see how this 20 really carries some weight with this SPY chart. So like right here, for example, you can see we broke up above it, it pulled back, bounced off of it, pulled back slightly, didn't quite hit it, and then we broke below it right there, and then it tried to get back up above it, and it acted as resistance, so it pulled back again before we finally broke back up above it, and then breaking back down again. But once we broke back up right here, you can see that it has bounced off of this 20 several times. There was a brief breakdown right there, and then we have broke down over the past couple weeks on it as well. So again, it's support and resistance, but it can also tell you the trend. So our trend, the 200, trending up. Our 50, it is trending up. Now our 20 was trending up, but it has flattened and actually started to go down. So that could say, or that could tell us that our uptrend could be about to come to an end. Again, our 200, this is our overall longer trend, still pointing up, still pointing to a pretty strong uptrend. So one of the strategies that can be used with moving averages is a crossover. And this specific crossover that I'm going to show you is called a golden cross. Now, some traders use different moving averages for the golden cross, but typically if you hear somebody say golden cross, they are referring to the 50 and the 200 crossing. A golden cross means the 50 breaks above the 200, and you also have what is called a death cross, where the 50 would break below the 200, and that would be a very bearish signal and likely downtrend that would continue. So when you're using this golden cross, this is actually your buy signal whenever you get the cross on it. So this would be your, it happened after this candlestick. So around 320, 325 would have been our buy signal. Now, I wouldn't wait for these to cross back below for your sell signal. What I like to do, again, was use this 20 as my support line and then sell once it broke below it. So if we were using this strategy on this chart, like I said, 320, 325 area, we would have broke below on this day, closed below, and that would have been about 340. We would have been out somewhere in that area. So from 320 to 340, about a $20 move over the span of about 2 months, a little over 2 months. So it would have been a pretty nice profit right there, and we could have just rode it as long as it held above our 20 moving average. Let's take a look at an intraday chart. Again, these moving averages can be used on all time frames. You can use it whether you're day trading, swing trading, or even long-term investing. Okay, so this is the chart for AMC from today. This is the 1 minute chart, and you can see how this 200 was support several times throughout the day. Went up, pulled back, right almost on it, and then it finally broke down below this 200 right here. So again, this 200 was acting as support. These 50 and the 20, not so much. It was kind of just in and out, but we did have stretches where it did put some weight on those moving averages. So we got our 20 right here. You can see we closed below it right there, but that was it. It was pretty much up, bounce off of it, up, bounce off of it, up, before finally breaking. So that's something you can sit there and watch while the candlesticks are being formed, seeing if it crosses below to give you a sell signal. So we're going to take a look at one other strategy using moving averages. And this is also a crossover of sorts, using crossovers as buy signals. It's called the Alligator Method. The Alligator Method uses 3 moving averages: the 5, the 8, and the 13. Okay, so the 5 is going to be the alligator's lips, the 8 is going to be the alligator's teeth, and then the 13 is going to be the alligator's bottom jaw. So we'll zoom in. Okay, so this chart, again, this alligator method can be used with a daily chart, a weekly chart, or your intraday charts. Let's see if we get a little better picture of this. Okay, so whenever you have your moving averages all just moving back and forth between each other, your alligator is sleeping. There is no trade, there is no trend in the market. Now when the alligator's lips cross above the teeth and the bottom jaw, your alligator is waking up. So that happens right here. You can see our 5 broke above the 8 and the 13. So the alligator is waking up. Now that is not your buy signal whenever you cross both of the other moving averages. Your buy signal comes when they are in correct order. So your teeth need to be in the middle, your bottom jaw at the bottom. So it should be bottom jaw, teeth, and then lips at the top. So this right here is where they actually all went into order. Right there was your buy signal. And that would have been on this candlestick around 860. Now you can use your sell signal as there's a couple different things you can use. You can wait for the cross back below, in which case you would have rode this from 860. It crossed back below right here on this candlestick. So you would have been out about 870. Or you can wait until you close back below either your 5 or your 8. In this case, we would have been in at 860. If you were using the 5, you would have been out at about 866. Or if you wanted to use the 8 as your breaking point, we did not close below until up here at 872. So that would have been from 860 to 872 would have been your trade from there. And you can see the alligator kind of went back to sleep right here. Right here, the alligator went back to sleep before waking back up to feed. So again, our 5 broke above both of them right here on this candlestick. Then on this candlestick is where the 8 moved above the 13. So this would have been our buy between 880 and 895. So we'll call it 890. And you can see all of these. You got the cross back right here. So if we were in at 890, if we got the cross on this one, we would have been out about 910. So that would have been about a 20-cent per share profit. Now, again, if you wanted to use your crossover, your candlestick crossing over your line as your sell signal, you would have done it right here at about 920. So you would have had 30-cent per share profit. Or if you wanted to, so those closed on it, that closed up, it would have been right here, about the same as using the cross. it would have been on this same candlestick right here. Again, it's a pretty simple method. You're following your lines. When your lines tell you to buy, you buy. When they tell you to sell, you sell. So that's the two strategies using moving averages. They're crossovers. There are many other strategies using different moving averages and other indicators with those moving averages as well. But it's, exploring what works for you. You got to try everything out to see what's right, what fits your trading style, and use it. Just because I use one thing doesn't mean you have to. It may not work for you like it does for me. It's all about trial and error and finding out what benefits you the most. So that's going to wrap up our lesson on moving averages. Again, the biggest thing is that is your support and your resistance lines. Typically, I would find where my 20, my 50, and my 200, the three that I like to use, I would find those on my daily chart, and you always want to keep those numbers in mind when you flip over and you're looking at your intraday chart, because they are still going to hold some weight. And then you would also have your new 20, 50, and 200 moving averages on the intraday charts as well. So I hope you enjoyed the lesson. I hope you learned something, found something that you'll be able to utilize in your trading. Well, I hope you found some useful information on the video about moving averages. Again, we have a free 7-day trial to our chat room. The link is in the video description. If you have not already done so, make sure to hit like and subscribe to my channel. If you see any traders out there struggling, send them one of my videos. Hopefully it can help them. That's what we're trying to do, is help as many people as possible, especially new traders that may have not even started trading yet. People that are just starting to get into it. Just want to try to speed up that learning curve for everybody, and get them on the right track to begin with, so that way they're not spinning their wheels in the beginning and wasting time. Again, link is in the video description. Free 7-day trial. Thanks for joining. Good luck and stay green.